What's happening, guys? What a difference a day makes, eh? Here's me popping the champagne, and now we're coming back for a retest. So we got Bitcoin starting to puke down here. Let's see what's happening. It's come up and it's retesting, and now it is retesting this breakthrough again. So this is to be expected. I even said yesterday, because it's left such a large wick on the weekly, I said don't don't be worried if this just comes down to do the retest of the wick to try the 50% or the 100%. What we don't want is a close below 78,000. It can play around here and refill this wick and carry on moving. It still needs to retest this trend line. I'll move this one here first because that still needs to be cut. But yeah, it's coming down. It's almost on a retest there, and it's retesting the daily 200 EMA as well. So it looks quite scary, but basically what happened was, look, this is what happened. Everyone went long. Now, when I said go long yesterday, obviously I don't use leverage. You go long on spot, so you don't get flushed out, you don't get liquidated or anything like that. And I said, even if you go long and it's going to come down 10% as it refills the wick, don't worry about it. That's around about 10% already. I said, if you're in spot, what's the difference between 10% there, where we're going anyway? So we're doing a retest, we're coming down, we're retesting. What we want to do is want to see where the daily candle closes. Ideally want to see it hit above there and move off, but we'll see how it sits. It's currently a retest now, and it's a retest until it breaks down past 78,000. But generally, guys, I think everyone's just got so much FOMO here. This big move here is it's such a monster move. And everyone that's went long here, with a combination of taking profits and everyone going long to hit all the liquidations and all the stop losses. I mean, look, this was stacked right up earlier, and now it's flattened again. So it's liquidated all the longs. This is what we want to see. And now everyone is starting to open shorts, which is good, because then you know what happens, guys. Once one side is weighted heavily, the market tends to go and take that as well. So let's have a look at the 7 days. We're back to business now. We're back to reality after the highs of yesterday. What have we got? We've got around about 1.5 long and 2.1 short. So not too bad. It might come down and take a wee bit more here, depending on where it is. You can see in the liquidation heat map on the 3-day. Try to go long, the yellow's there. Try to go long on the yellows here. Try to go long, and it's just flushed everyone down. So it's unfortunately what happens, and you can see, guys, volume is still increasing, so this is a good side. This is what happens if you get in too early. When you're getting into these moves, this is why just don't use leverage, guys. This is what's wrong with the market. Everyone just gets too excited and opens up leverage to try and get in, but you end up the market will just crush you and chew you up. So everyone's got excited on this move up, on the announcements, opened up longs, the stop losses down below here or something, and then you've got your 100x leverage, your 50x leverage, your 25x leverage. So when you, as a general quick rule of thumb to calculate your liquidation level, if you open up a position with a certain amount of x, say 50x, you divide that by 100, you divide 100 by your leverage, and that gives you the percent move that will liquidate you. So if you open up 100x, 1% move will liquidate you. 50x, 2% move will liquidate you. If you open up a 25x leverage, a 4% move will liquidate you. And you open up a 10x leverage, a 10% move will liquidate you. So on this run up here, everyone has just gone max. They've just gone max FOMO. And then what's happened at the top? So they've opened it up. Now remember what I said. 100x, 1%, 50x, 2%, 25x, 4%, 10x, 10%. And it's just come down 10%. So anyone that opened up these leverages here, they've all got liquidated, and there's some still more to get that have opened. That's why it's so crazy. I don't understand why people do it. It's just not worth it, guys. There's so much money to be made just doing like normal spot trading. There is no need. It's basically people looking to get the home run, but you don't want to do the home run. You just want to hit base by base by base, take it home. So what we're seeing, guys, is just a flush down in the market. There's not much to add there. The good thing is, even on that huge run up there, the fear and greed is still in fear. So there was no quick change of sentiment, so that means like a bigger move is brewing. You know, that move's happened. We still got this to all ride up into extreme greed, so we've still got the big move ahead. It's just that we are in a flush down now. And everyone that's FOMO'd in on longs have just been crushed, unfortunately, guys. I hope you're in spot if you're jumping in. So probably just a short one tonight. We've got the volume kicking up, which is good. The long and shorts, it's weighted towards the shorts, so another good sign. ETFs, that's just calmed down after the crazy outflows. So all these are huge reversal signs, guys. You know, the volume's up, making the move happening. This is a huge reversal sign, the biggest outflows there. Whenever you have a lot of outflows on the ETFs, they're like an inverse indicator. They mark tops and bottoms. When you get a lot of inflows, people FOMO in, and then when you get a lot of outflows and the fear, sell on fear, they mark the bottom. So we've got the people are short, we've got this mass exit of ETFs, and then we've got the liquidations, we've got the shorts up at a couple billion. Let's just go for the 30-day and see how that's looking. Oof. Yeah, the short liquidations are up at 5.5 billion again. Oh my god, this still needs to run, guys. Yeah, so it might take a wee bit more in the longs, but it's only 1.5 billion against 6 billion-ish. So this is very roughly, there's 4x amount of money in the last 30 days betting price is going to go down, then price is going to go up. So this move is eventually going to play out. It's going to liquidate maybe a wee bit more, and then all this needs to be taken. And when price is pushing this down, you know, it's a double. The market's so clever in a sense, because it'll come down and take this liquidations, all this liquidity, but while it does it, it makes everyone go short. So it makes all this liquidity above it even more. It builds it up, so when it wants to reverse it back up, it can take a huge amount. So we're just currently in a move, a bit of a dampener onto our massive move up there yesterday, but we just need to let the market play out a little bit and let things reset, and unfortunately liquidate the FOMO buyers, which is an unfortunate thing, guys, but it's part of the market. So back to normal, and if you like these, hit like and subscribe, and I do these videos every single day, give you the market updates, go through the liquidations levels, and I read the charts pretty well. So have a good one, guys, and I'll speak to you again tomorrow. Cheers.